It is the deepest, most corrosive kind of pain in trading. The feeling that you were right, but your timing was surgically wrong. You entered the trade confident only to watch the market immediately dip, hit your carefully placed stop loss, and then, the moment you are out, it reverses and rockets exactly where you originally predicted. You were shaken out. You were used. This is not bad luck, and it is certainly not a flaw in your analysis. This devastating pattern happens consistently because your premature action, your early surrender, is not a mistake. It is a required input. It is necessary fuel. To understand why you keep donating your capital at the precise turning points, you must stop thinking of the market as a chaotic battlefield of competing institutions. That is a distraction. Instead, you must internalize the concept of the composite man. This is the central intelligence of the market. It is not an individual trader. It is the aggregation of all professional, well-funded, and patient money, operating with a single unified purpose: to accumulate cheaply and distribute expensively. The composite man has only one resource it truly values: liquidity. And liquidity is always found in one place, where impatience and fear converge. Think about that moment you panicked, that moment you finally hit the sell button, taking a small loss just to make the pain stop. That tiny transaction, multiplied by millions of other retail traders feeling the exact same despair, is the lifeblood of the next major move. Every time you act too early, buying the first sign of strength, you create the liquidity the CM needs to sell into your excitement. Every time you exit too early, selling the first sign of weakness, you create the liquidity the CM needs to start accumulating your shares. Your impatience is not a character flaw the market punishes. It is the most valuable asset the composite man exploits. But how do we know this mechanism? We know it because it was meticulously documented by one of Wall Street's most persistent students. The principles of the composite man, accumulation and distribution, were codified nearly a century ago by Richard D. Wyckoff, the founder of the magazine of Wall Street. Wyckoff spent 33 years studying the market, observing the forces that influence it, and developing methods of trading and investing based on intelligent foresight, not guessing. If you are tired of acting prematurely and being the bait, you need a foundation of knowledge. Wyckoff's classic work, How I Trade and Invest in Stocks and Bonds, is now available in an annotated and adapted edition for the modern trader by Max Davidson. This book is the result of Wyckoff's effort to clarify and crystallize the principles that guide successful operations, moving you from surface appearances to the underlying technical conditions. Start your dedicated study today. The link is in the description. Wyckoff realized that until you recognize the sophisticated mechanism designed to monetize your anxiety, you will continue to be the essential ingredient that fuels the moves you desperately wish you were on the right side of. The composite man does not need you to be intelligent. He does not need you to be skilled. He only needs you to be predictable. And the predictable trader always acts prematurely, always surrenders control when the pressure peaks. You are not the hunter in this phase of the market cycle. You are the bait. And until you recognize the sophisticated mechanism designed to monetize your anxiety, you will continue to be the essential ingredient that fuels the moves you desperately wish you were on the right side of. But how exactly does the composite man orchestrate this trap? How does he engineer the illusion of strength and weakness that forces your hand? That comes down to understanding the critical difference between true accumulation and the final test phase designed solely to trigger your stops. The composite man, by definition, is not a single entity. It is the aggregated force of institutional money. Think about the scale involved. When you need to buy 100 shares, you hit buy. When the CM needs to accumulate 10 million shares, they cannot just hit buy. That would rocket the price instantly, defeating the entire purpose of buying low or selling high. This colossal scale dictates the necessity of the trading range. The range is not an accident. It is the operational environment required for discrete distribution or accumulation. It's the camouflage. It is the slow, grinding process that ensures volume can be absorbed without spiking the footprint too early. This takes time, weeks, months, sometimes years. Time is the weapon against the impatient. The primary psychological function of this prolonged range is simple: frustration. It is designed to bore you out of your conviction. The market moves sideways, oscillating just enough to give you hope, then immediately taking that hope away. You buy the low, it drops lower. You sell the high, it spikes higher. You are trapped in a low-reward, high-stress environment where your stops are continually being triggered, but no substantial trend ever emerges to reward your suffering. Consider the fishing analogy. The composite man isn't casting a net, he's fly fishing. He casts the bait, a small tempting move, and lets it sit, letting the intermediate traders nibble. He lets them hook themselves, then he waits. He doesn't reel them in immediately. He lets the tension build until the weak hands, the impatient, the undercapitalized, the psychologically fragile, can no longer hold the line. They cut their loss, surrender their position, and exit the trade usually right before the move begins. Are you holding the line, or are you hoping the line holds you? This process is the transfer mechanism. The goal is the systematic transfer of shares from weak hands to strong hands. Your frustration, your fear, your lack of patience, these are the liquidity the composite man needs to fill his orders without undue price slippage. You must stop viewing the market as a neutral playground. It is not. It is a highly sophisticated patient predator. It doesn't need to be fast. It only needs to be predictable. And you are predictable. It knows precisely when the average retail trader will enter and precisely when they will panic. The CM exploits the human need for certainty in an environment that offers none. The range is the grinding wheel that sharpens the institutional edge while dulling yours. It is the necessary evil that ensures the composite man can acquire his position at the best possible price. But acquiring the position is only half the battle. The true mastery lies in the final shakeout. The critical moment where the CM forces everyone, including the professionals, to choose between surrender and conviction. This final test has a specific name and a specific structure that, once understood, makes the manipulation visible. The structure is the upthrust or the spring, depending on which side of the range you stand. But the psychological mechanism that allows this trap to work is the lure of certainty. You have been watching the range for weeks, perhaps months. You are patient. You understand the accumulation process. But then the market gives you a sharp, high-velocity thrust just past the critical resistance level. It looks like the confirmation you have been waiting for. It looks like the signal that eliminates doubt. But look closer. The volume is thin, often declining on the way up. It's too fast. This is a cheap signal designed not to commit genuine capital, but to harvest yours. The composite man knows that waiting is painful, and he knows that the intermediate trader, exhausted by the waiting game, will pay any price for cheap certainty. That tiny, arrogant voice erupts inside you. If I wait for the retest, I'll miss the entire move. This is the moment I prove I was right all along. This is the ego demanding efficiency. You want the perfect entry, the one that maximizes profit while minimizing risk. You chase the confirmation, desperate to eliminate the doubt that has plagued your trading for months. You enter the trade. You feel that surge of relief, that brief, intoxicating moment of certainty. You just paid for the privilege of being wrong. The composite man sees your entry. He sees the sudden spike in liquidity provided by thousands of traders just like you, all rushing to confirm the breakout. This is precisely when the CM executes his final selling orders, not to begin the downtrend, but simply to capitalize on the provided demand. The market stalls, hesitates for a breath, and then violently reverses. That high-velocity thrust becomes an immediate high-velocity reversal, often engulfing the preceding candles in a brutal rejection. Your stop is hit instantly. The pain is sharp because it wasn't just a loss. It was a loss after you felt certain. It's the betrayal of confirmation. Why does the Composite Man engineer this specific trap? Because certainty is the most expensive commodity in the market. He knows the emotional cost of indecision. The premature entry is driven by the desire to catch the absolute top or bottom, the ego stroke that says, I am smarter than the Composite Man. But the market doesn't reward smartness. It rewards discipline. You confuse a shallow, quick thrust with true market conviction. The premature entry is a costly mistake, but it is not the final test. The CM saves his most brutal and meaningful manipulation for the moment, after the premature traders have been cleaned out. That moment, the true shakeout, is what separates the consistently profitable from those still paying the certainty tax. And that final test is where most professional traders fail. The final test is rarely a slow bleed. It is a sudden, violent thrust beyond the established trading range, the spring, the shakeout. This event is mathematically engineered to trigger maximum pain and minimum conviction. It's the Composite Man's final proof point. He needs to know, definitively, that there is no more weak liquidity left. This is why the price action must violate the low you have been watching, the low you told yourself was the line in the sand. When that low breaks, it doesn't just trigger your stop. It triggers a primal fear response. Your analysis, which might have been 80% correct, suddenly feels worthless. The chart looks catastrophic. You see price slicing through the previous support like a hot knife through butter. You think, I was wrong. This is the collapse. I must save what I have left. This is the moment you panic sell. You liquidate your position, often adding insult to injury by shorting the breakdown, confirming your exit just as the Composite Man confirms his entry. You have just provided the ultimate gift, liquidity. Every stop loss that fires every panic market order is a sell order delivered directly into the hands of the Composite Man. He was never interested in your analysis being wrong. He was interested in your timing being terrible. The shakeout is not designed to show you that the structure is broken. It is designed to exploit your fear of it being broken. It is a trap built on human impatience. And then comes the profound betrayal. The price action snaps back almost immediately, a rapid, unforgiving rejection of the lows. This swift reversal is the sign of strength, and it happens with such speed and force that the premature seller cannot possibly re-enter. You are left staring at the screen, holding the cash from a losing trade, watching the market surge away without you. The feeling is not just loss. It is profound personal abandonment. You waited, you studied, and yet your discipline failed at the precise moment it mattered most. The shakeout proves that the market is not testing your intelligence. It is testing your emotional endurance. It is testing your capacity to hold conviction when the noise is loudest. The Composite Man knows you can analyze the chart. He just needs you to prove you cannot trust yourself. But what if there was a way to identify the intent of that snapback? What if the volume signature of the true sign of strength tells a story that eliminates the betrayal entirely? What if the key to surviving the final shakeout isn't psychological resilience, but simply reading the volume correctly? The truth is, the volume signature of betrayal is often the loudest sound on the chart. We spend so much energy looking for the spring in accumulation, the sudden thrust upward that confirms the low. But we ignore the mirror image, the most dangerous phase of all, distribution. The Composite Man's greatest strength isn't his buying power, it's his patience during the sell-off. In accumulation, he needs you to sell too early, defeated. In distribution, the dynamic flips entirely. He now needs you to buy too late, convinced. He has spent weeks or months building an inventory of assets that now must be liquidated at the highest possible price. But who buys billions of dollars of stock from a single entity? The intermediate trader does. He needs your conviction. This is where the deception peaks. The market has been trending up. Everyone is talking about the new high. You missed the initial move, but now you see a breakout above the previous peak. You tell yourself, this is the final confirmation I needed. This is the upthrust after distribution, or the final buying climax. It is designed to be undeniable. It is engineered to look like the definitive sign of strength that will launch the next leg up. But look closer. That massive volume bar accompanying the new high is not new money entering to start a fresh trend. It is the Composite Man offloading his final inventory into your eager hands. It is the transfer of wealth from the strong hands who are done to the weak hands who are just getting started. Why does this work so reliably? Because you believe in infinite momentum. You believe that what has worked for the last 6 months must continue working for the next 6 weeks. Impatience is not just a psychological weakness. In the context of distribution, it is a direct tax levied by the market. You are paying a premium to enter at the exact moment the smart money is exiting. You see the chart making a high and your ego whispers, "If I don't get in now, I'll never forgive myself." That whisper is the sound of the trap snapping shut. You are convinced you are riding the wave, when in reality you are the final anchor the CM needed to pull to complete his operation. The tragedy is that the volume confirms the move, but you misread the intent of that confirmation. The high volume confirms the supply absorption, yes, but who is supplying and who is absorbing? The answer to that question is everything. Understanding the UTAD isn't about calling the top. It's about understanding why your fear of missing out is the CM's most reliable liquidity source. But how do you differentiate a genuine, explosive breakthrough from this final, fatal act of deception? There is one specific signature that reveals the CM's true intentions right before the cliff edge, a signature that eliminates the need for guesswork entirely. That signature exists, yes, but you won't see it if you are still trying to be the oracle. The market doesn't reward prediction, it rewards response. The reason you constantly enter trades too early, chasing the first breakout candle, isn't FOMO alone. It's a far more insidious poison. The need to be right. You demand certainty from an inherently uncertain system. You confuse conviction with arrogance. This is the stage where the intermediate trader gets trapped. They have enough knowledge to identify a setup, but not enough self-awareness to wait for confirmation. They step in precisely when the Composite Man needs an audience for his final, spectacular performance. Why does the CM rely on you acting too early? Because premature action is the purest form of immediate gratification. You want the dopamine hit of being in the trade, rather than the profit of being correctly positioned. The market is not a lottery ticket, it is a waiting game. Every time you push the button too soon, you are essentially paying a premium, the price of your own impatience, to provide liquidity to those who have mastered the art of doing nothing. Think about that for a moment. You are paying for the privilege of being wrong. This impatience is simply the ego refusing to accept the only true reality of trading, uncertainty. This refusal to accept uncertainty is the foundational flaw that the Composite Man exploits every single time. The moment you decide you know what the market is going to do, you have become a reliable source of fuel for the opposite move. The market rewards skepticism and punishes certainty. The battle for your capital is not fought across weeks of consolidation. It is fought in the 2 seconds before you click the mouse. In those 2 seconds, the ego whispers, "If you wait, you will miss it. Prove you know this market." That whisper is the Composite Man's siren call. To win consistently, you must surrender the need to be the smartest person in the room. You must embrace the paradox. To gain control over your results, you must first surrender the need to control the outcome of the next candle. When you insist on certainty, the market charges you the highest premium possible, your entire trading account. The market is a mirror. If you see impatience and panic reflected back, it is because you brought those qualities to the glass. So how do we neutralize this internal pressure? How do we silence the ego just long enough to see the final trap being set? The key is not more willpower. The key is structural objectivity. We must define the line in the sand so clearly that the moment of execution becomes mechanical, not emotional. That line exists, and it is defined by the three specific volume and price behaviors that reveal the final exhaustion of the composite man's effort, long before the reversal begins. This is where the paradox of the composite man is met with the paradox of the trader. Your ego demands prediction. It craves the intellectual victory of calling the absolute top or the absolute bottom. It tells you that if you wait, you are slow, you are weak, you are missing the move. This is the oldest lie in the market, whispered directly into the ear of the impatient. The composite man doesn't mind if you're right about the direction. He only needs you to be early. The solution is not to become a better predictor. The solution is to become a disciplined confirmer. You must move from the mindset of the psychic to the mindset of the detective. You are not trying to guess where the composite man will strike. You are simply waiting for him to show his hand. This waiting is the ultimate act of psychological surrender. You are surrendering the need for control. You are giving up the intoxicating yet deadly feeling of the perfect entry. What does it look like when the composite man shows his hand? It looks like a test of the previous climactic action. It looks like a final, desperate shakeout designed to flush out the last remaining conviction. In Wyckoff terms, we are waiting for the definitive test, a shallow penetration on declining volume that fails to generate follow-through. Or if we are in accumulation, we wait for the sign of strength, SOS. If we are in distribution, the sign of weakness, SOW. These are not anticipatory signals. They are confirmation signals. They are proof that the composite man has finished his job of trapping the weak hands and is now ready to commit capital in the intended direction. This waiting period is not passive. It is the most focused, difficult work you will ever do. Patience is often mistaken for inaction. In trading, patience is disciplined observation. It is the Stoic realization that every minute you wait, the composite man is expending energy, volume, and emotional capital trapping the impatient trader. He is setting up the bear traps and the bull traps, and the most effective defense is simply to stand outside the ring watching the spectacle. You allow the market to expend its volatility. You allow the composite man to exhaust his supply or demand. Your entry is delayed because your edge depends entirely on the exhaustion of others. When you surrender the desire to enter precisely at the moment of reversal, you stop feeding the trap. You gain an objective distance that is unavailable to the trader who feels the constant pressure of missing out. The cost of being early is always higher than the cost of being late. Always. This is the paradoxical solution to the composite man's operation. To gain the ultimate edge against the market maker, you must first surrender control of your timing. You must accept that your job is not to predict the future, but to confirm the present exhaustion of the market's energy. But how do we define exhaustion? What does a true test look like, and how do we differentiate a weak SOS from just another fleeting manipulation? We must look deeper into the structure of volume itself because the composite man cannot hide his final effort from the tape. You can watch hundreds of hours of content and read dozens of books about the market. You are filling yourself with knowledge, which is excellent. But knowledge alone won't make everyone rich. Because not everyone possesses the right foundation. The market is the same for everyone. The only difference lies in the mindset. You can have a perfect trading system, but if you lack discipline and an understanding of your own psychology, that system is worth nothing. I often see a recurring theme in your comments. It is easy to talk about strategy in theory, but when it comes to the actual trade, many struggle with emotions. For those who want to focus on discipline, patience, and self-discovery within trading, I have created a new channel called The Stoic Trader. I believe it will help many of you bridge these gaps. So if you think this kind of content would be useful to you, go ahead and check it out. The link is, as always, in the description below.